Yesterday, a quiet storm broke in the blockchain world. It wasn't Bitcoin hitting a new all-time high or Ethereum's next upgrade, it was VeChain. They didn't just launch a DevNet, they ignited a revolution in their own ecosystem. This isn't just a technical upgrade, it's a fundamental re-architecture of their entire financial system. A strategic pivot that could either send VT to the moon or crash it straight into the cold, hard reality of September's crypto turbulence. Today, we're dissecting the Hayabusa Devnet, a $15 million incentive pool, and the data that will decide if VeChain is about to break out towards $0 through 35 or fall victim to the crypto calendar curse. Hey everyone, and welcome back. We need to talk about what just happened with VeChain. For years, VeChain has been a top contender in the enterprise blockchain space, known for its powerful Proof of Authority (POA) consensus. It's a system built for efficiency and trust with corporations. But let's be honest, it lacked the true decentralization that a lot of crypto natives crave. It was a trade-off, a necessary one perhaps for big business adoption. But on September 2nd, the VeChain Foundation officially launched its Hayabusa Devnet, a massive step in their Renaissance 2025 roadmap. This isn't a small tweak. They are transitioning from that old POA model to a new, community-driven Delegated Proof of Stake or DPoS model. This is VIP 253. And it's a monumental shift. It means the power is moving away from a small group of pre-approved authority masternodes and into the hands of a broader network of validators and, crucially, delegators, you, the VT holder. This is a direct play for greater decentralization and a stronger, more resilient network. But the real game changer is tied to its dual token model. VeChain has VT, which is your store of value, and VTHO, which is the gas for transactions. Under the old system, VTHO was generated at a fixed rate, regardless of network activity. It was a source of constant inflation. This new upgrade, VIP 254, completely revamps that. Now, VTHO is dynamically issued based on staked VT, and every single base transaction fee is burned. This is a powerful deflationary mechanism. The more the network is used by enterprises, the more VTHO is burned, and the less inflationary pressure there is from issuance. It ties the value of VT directly to the utility of the network like never before. It's a beautiful piece of tokenomics design. This is all incredibly bullish news from a fundamental perspective, but the market doesn't exist in a vacuum. We're in September, a month historically notorious for bearish price action in the crypto world. Just this past weekend, Bitcoin slipped below $108,000, a clear indicator of the market's shaky foundation. While BTC has since clawed back some ground, the fear and greed index is still in a precarious spot. This is the macro backdrop VeChain is launching into. The immediate on-chain data for VeChain itself is mixed. While we've seen a 20% surge in validator engagement, suggesting a positive response to the DPoS transition, the VT token itself has been struggling. Over the last 24 hours, VT is down about 1%, and it's down nearly 2.6% on the weekly chart. While the longer-term performance is positive, up 11.5% over the past year, the short-term price action is telling a different story. So, here's the fundamental tension. You have a major, technically sound fundamental catalyst with the Hayabusa launch, but it's colliding head-on with a bearish market sentiment, the historical September curse, and a global economic climate defined by a looming tariff war and general risk aversion. Now, for the price action. Can VT actually hit $0 35 this month? Let's look at the technicals and the macro factors. First, the technical picture. According to analysts, VT is likely to see a small correction before any major move. The prediction is a potential dip to around $0.229 by mid-September. This is a key support level to watch. A bounce off of that level would be a textbook bullish signal, confirming a consolidation period before a potential upward move. If it breaks below that, the bearish sentiment could be more powerful than the fundamental news. So what are the catalysts that could propel VET past this resistance and toward $0.35? The most powerful potential catalyst is the Federal Reserve. There is a high probability that the Fed will cut interest rates by 25 basis points this month. Lower interest rates make riskier assets like cryptocurrencies more attractive to institutional and retail investors alike. If this rate cut materializes, it could serve as the single most powerful bullish force for the entire crypto market, and VT, with its new decentralized model and solid fundamentals, could be a major beneficiary. The injection of liquidity and a shift in investor sentiment from risk-off to risk-on could easily overwhelm the September historical trend. However, the risks remain. President Trump's tariff war is a constant source of global market uncertainty. Any major escalation could cause a flight to safety, sending capital out of crypto and into traditional safe havens. This would derail any rally, regardless of VET's underlying strength. The VeChain Hayabusa launch is a massive long-term fundamental upgrade. It's a strategic masterstroke that tackles the issues of decentralization and tokenomics head-on. It positions VeChain for a new era of enterprise adoption with a stronger, more sustainable economic model. However, the short-term price action is still subject to the whims of the broader market. While a dip to 0.0229 is a possibility, a successful Federal Reserve rate cut could act as a powerful springboard. For VET to reach $0.35 this month, it will require a perfect storm of positive news, continued on-chain adoption of the new Devnet, and a supportive macro environment triggered by the Fed's monetary policy. This is not a guaranteed trajectory. It is a calculated risk. My final analysis is this. The long-term outlook for VeChain has never been stronger. This upgrade is a huge win for the community and the ecosystem. But for this month, for September specifically, a breakout to 0.35 is a stretch. A more realistic target is a rebound to 0.025. A move to 0.35 would signal a complete break from September's bearish history, a sign that the fundamental upgrades are already overpowering macro forces, which would be an incredibly bullish signal for the months and years to come. Crypto disclaimer. All content on this channel is for informational purposes only, and does not constitute financial advice. The cryptocurrency market is highly volatile, and you should always do your own research before making any investment decisions. I am not a financial advisor. Never invest more than you are willing to lose. This video provides an overview of technical analysis in crypto for educational purposes.